Apple stock it is. This thing's getting hammered after hours, ladies and gents. Apparently that's the phrase of the day. What's going on with Apple stock, man? What's going on? Things getting hammered. We're gonna take a look at these earnings and see if it's worth it. Just reported earnings after hours, obviously. I think it's gonna be the last of our stocks we touch on today. I hate telling you this, and I hope you don't cry. But I think this is gonna be the last one we touch on today. So I hope you really are ready for a ride. So let's look at these earnings, okay? GAAP EPS of 73 cents beats by 3 cents. I can't lie to you and tell you I'm not a little bit disappointed with that. I think I am. I expected a bigger beat in terms of profitability because I thought they were lowballing that EPS number a little bit. I thought they were lowballing it, a little bit of sandbagging, and I guess they didn't. Analyst estimates were a little bit accurate. So I give the analyst credit on that for being right for once, but typically you're always wrong. But the revenue line is quite exciting, 64.69 billion. It's too funny every time. It's too funny because it's a gross thing, up 1% year over year, beats by 1.3 billion. Now this one, if you do recall, I think they were expecting, it was a slight decline, like 2%, I think. It wasn't anything super crazy. And I called for it to be a flat or low single digit. So they did that. Beat by 1.36 billion is a big beat. I can't lie to you. What's Donald doing on the right here? He's just talking, man. So a good revenue line. iPhones, weak sales, and I think that's why it's getting hammered. 26.4 billion versus a 27.7 consensus. That's a pretty big miss. Mac, though, pretty massive. 9.03 versus a 7.9 billion consensus. Big beat. iPads even, normally a weak segment. 6.79 versus 6.14 billion consensus. Big beat. Wearables, massive segment for them now. A 7.8 versus 7.2 consensus, big beat. And services, which is really look, sometimes you mess up the words, and I don't want to be made fun of for it, so don't you dare flub. Don't do a flub count. And I just flubbed saying that. But record services revenue, this will eventually take over the iPhone revenue. It's probably going to be a good 5 to 10 years down the line that it does. Let's be fair. I think it's closer to 5 years. 5 years maybe is a good estimate that services takes over. And this company will shift. 14.5 billion versus a 14.12 consensus. Big beat there. That's a record service revenue. So I do think iPhone weakness is the main reason for this stock being down. And I'll just tell you right now, I'm a buyer of this stock when it's going to be down under 110. If it's if it opens up tomorrow down 5% again, I'm a buyer of this stock. I am. But just throwing that one out there. I know I did a little preemptively. Normally I wait till the end, but I think it's a little bit unfair because you talk about iPhones. A good portion of people probably are going to be waiting for 5G. I know for a fact I am. My phone's over 2 years old now. Close to 2.5. So I'm due for an upgrade, but guess what? I'm going to wait until a 5G phone comes out. Sorry, it's not going to be an iPhone. But I'm waiting for 5G. So people might be waiting for the 5G iPhones instead of upgrading to an 11 or really maybe, SE, not much revenue for them to be had there because it's a cheaper phone. But I think the new 5G iPhones will be big. I think it's going to be a big cycle for them. And I think that's why this iPhone revenue might not be what you expected. They also declared a dividend of 20.5 cents, which is, if you count for the split, it's in line. Not unexpected. They will go ahead and raise. Hoopsie daisy. I'll go ahead and raise. They will raise that here next quarter. Annualized raising, baby. As far as some of the finer details, EPS line beats, obviously, as we mentioned. Revenue breakdown, we saw that. Overall gross margin was 38% versus a 38.1 consensus. That's fine there. Services margin was 67.2 versus a 66.5 consensus. Good there. And products was a 29.7 versus a 30% consensus. And I do want to mention, I think some of that probably is going to be iPhone SE's lower price, dropping that down just a little bit, just in case you were curious. And here from Luca Maestri, the CFO. Our outstanding September quarter performance concludes a remarkable fiscal year where we established new all-time records for revenue, earnings per share, and free cash flow. You would hope so, because that's what you would expect out of a growing company. In spite of an extremely volatile and challenging macro environment, I agree. I mean, obviously, pandemic times. Good to see a company, a good company shows, like, hey, I don't care about this going on. I'm going to show great numbers. Our sales results and the unmatched loyalty of our customers drove our active installed base of devices to an all-time high in all of our major product categories. We also returned nearly $22 billion to shareholders during the quarter as we maintain our target of reaching a net cash neutral position over time. Interesting stuff. Yeah. I mean, you don't like hearing that line because it kind of is showing that not good. They give by region here, and you see in total by segment, Americas grew, Europe grew, Greater China decreased by a decent bit, so that's definitely a part of it. Japan grew by a little bit, and rest of Asia Pacific grew by a decent bit. Now, one thing I have to poo-poo on Apple for, which I'm going to. I'm going to give them the poo-poo. I mean, look at this. Look at this nonsense. I mean, this is your earnings. This is your report, really? This is going to be your absolute press release. Are you kidding me? That's it? The only thing you can find good on this is, well, nothing. You have to go to their consolidated financial statements to find the good stuff. And as we saw, as far as services is concerned, which I like, we'll see. We're doing quarter over quarter, or really quarterly comparisons. So for products, they did $50 billion this quarter, 50.1 versus 51.5 in the quarter last year. So there is a decrease there in terms of products, which again makes sense because not a new iPhone this quarter, by the way, compared to obviously the 11 in last year's. Just people are you gotta wait for the new products. But services though, 14.5 compared to 12.5, grew $2 billion, pretty massive, and that's what I'm talking about. This growth is for this company. It's in services, so you definitely need to look at that. Net income line decreased. It did decrease, 12.6 versus 13.6. Billion, obviously, definitely decreased quarter over quarter. 9 months ending, though, we've seen an increase, actually. So this quarter just took a little bit of a hit. Bad category. iPhone, you see, dropped, again, because really not a new device. Dropped by around $7 billion. Scary stuff. But Mac grew by $2 billion, which is big for Mac, by the way. iPad grew also by around a little bit over $2 billion, which is big for iPad, very big for iPad. Wearables has grown by over $1 billion. For the year, though, has grown by $6 billion, and services grew by $2 billion, as we saw there, which is big. But for the year, really has grown closer to $7 billion. So really good stuff. Balance sheet we look at, and this is I get a little bit of disappointment from this balance sheet. I'm just going to spoil it for you. We look at total current assets on the left here for this year, 143.7 versus 162.8. So it's decreased by quite a bit. Usually when you see that decrease in cash position like that, you hope they paid down some debt. We'll look at that. $323 billion in total assets versus $338 billion in total assets before. So again, $10 billion out of the way, $15 billion out of the way. You hope they decrease debt. But total current liabilities has actually stayed relatively flat, only decreased by around $400 million, or really closer to $300 million. Total liabilities in general, though, actually rose. It rose by $10 billion. So you see stockholder equity went from 90.4 or 90.5 last year, a year ago, now to 65.3. So you see a shrinking balance sheet, and I think maybe that's what investors aren't liking about this. And I get that. I don't like necessarily seeing that line, shrinking balance sheet, because overall total liabilities and equities shrank. You don't like a shrinking balance sheet, and you don't like a shrinking stockholder equity. You don't. The company is still profitable, can't lie to you. So I'm not concerned in that aspect. The debt piling up is not good. And again, I don't think this is necessarily a scare thing for this company. I wouldn't be scared of it. I think it's perfectly fine. But I'd like to see a better, performance on the balance sheet. I do think next year they'll return to really premier performance on balance sheet. This year, it can be disappointing. I'm not gonna cry on this one, unfortunately. I usually do cry. I'm gonna hold my tears back on this one. I've already cried too much today, so really hope you enjoyed and you have a great one. I'm gonna consider buying this bad boy. For sure. I mean, if it stays under 110, I'll consider buying some more of it. I'm already up massively on the position, so it's not like it matters too much. I'm up, 200%, so I don't know if it hurts me too much, but still, I'm gonna see what we can do. Hope you had a good one and you have a good day.